Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite, we have Jennifer Lee. She's the vice president of the FinTech group over at Edison Partners, and we're here to take a pulse on the private equity investing market. Jennifer, thank you so much for joining us at MarketSite. Let's talk about 2018. What was the environment like for private investing?
It was interesting, for sure. I don't think it's a secret that we've got a lot of capital slushing around. I think we've actually surpassed, what, 1.14 trillion in committed capital in the overall private equity industry now. And it's been certainly interesting because of that. Obviously, there's lots of interesting companies to invest in as well. And so lots of activities and lots of high valuations, lots of pipeline for IPOs as well. So very exciting times.
All right, let's look ahead to 2019. How do you think the growth of the private equity space will shape up for next year? Better or worse than 2018? Why?
I think, and I know there's a lot of talk here going on because of volatility and the recent market movements and things like that. I think everybody is watching very closely. Nobody really knows what's going to happen, but in the private markets, I do think the activity for 2019 is still very strong and will be because one, there's a delayed effect between the public and private markets, and that massive slush of capital isn't going anywhere either, right? Alternative assets as a private equity as a class is still extremely strong in terms of appetite. So we foresee a lot of interesting deals that can be happen in the industry, as well as looking out into the exit pipeline. Real shakedown, we think, will happen in terms of companies with true unit economics as well as growth potential, as well as really strong unit fundamentals in the business. Those will continue to perform really well and attract capital.
And let's talk about FinTech trends that you saw in 2018 and what you expect for 2019.
So 2018, we saw a lot of collaboration across the board, whether it be with financial institutions and incumbents, all the way to regulators who are actually embracing more of the FinTech trends, which we think are very encouraging in terms of figuring out how to work with the companies rather than more of a gotcha mentality, which is absolutely great. We see a lot of movement in financial inclusion, as well as democratization of financial services, really trickling down into whether it be the masses or certain asset classes that were not available to other individuals, for example, which we think are extremely interesting going forward as well. Finally, rebundling is still happening, and I think 2019 will really be the year where rebundling will happen, as well as really create strong players, strong big players within the FinTech landscape who can truly cater to the real market needs.
Now, what's your advice for companies in the coming year, particularly as they navigate this volatile environment?
I think one important thing is focus on the fundamentals of the business, regardless of what happens volatility is here, right? It has been here for the last few months, and 2019, I still think it will be a very volatile sort of environment. Regardless of whether we come out of it or there's a down or whatever pullback, whatever it may be, companies with strong fundamentals as well as unit economics will continue to grow, will continue to do well, and will be able to still attract that massive slushes of capital in the private markets, among others. So I still think it's actually quite exciting.
All right, Jennifer, thank you so much for joining us at MarketSite.
Thank you.
And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.